Hi guys, how are you doing? So let's get straight to the business. This is your chart. As you can see, this is MT5, and when you open it first, this is how it's going to look like. You know, this is the place where you will see all your currency pairs. So this is it. This volatility 75 index. So you click this place. This is where your charts are. So first of all, we are not going to use this red line and this RSI. So we need to clear them off. So this is how to do it. You click here, then you click this delete icon. You choose this moving average relative strength index. You choose this, then you delete them. You can see everything is clear now. It only remain your candlestick, and that's what we use to read our chart. So let's get straight to some indicators and tools we will need. So please listen carefully. Okay, the first is go here, go to moving average. You can see this is 10, this is default settings. Then remove it and input 48. What I call it 48. Shift, leave it at 0. Method, leave it as simple. Apply to, leave it as close. Pixel, you can choose anyone you like, doesn't matter. But this one is telling you how bold do you want the moving average line to be. If it's 1, it's going to thin. 2, 3, 4. Or 4 is bold. For example, let's use 1 so you understand what I'm talking about. So use this. So this color, you can choose any color you like, so it won't get you confused with other moving average. But for me, I prefer using yellow for my 48 moving average. So go ahead and press done. Can you see? This is the moving average I just inserted. But can you see the line? It's clearly not really visible. So you can go back there. Yeah, this is the 1 pixel. Then choose 4 pixel. This will tell you if you want it to be bold or to be thin. So let's choose 4 and see how it looks like. Can you see? You can see it's very clear. It's bold. So that's why I prefer using 4 pixel. So the second step, you go here. You can see main chart plus. You can see. Then choose moving average again. You can see the one we inputted last is the one that is still there. So you clear it off, then input 14. So you can see that's 14 moving average. Shift, you leave it at 0. Method, simple. Apply to, close. Pixel, you can use anyone you like, but I prefer using 4 pixel. So this color, you can use any color you want, so it won't get you confused. But me personally, I prefer using blue color. You can see this is blue. My 14 moving average is blue. So done. Can you see? This is the 14 moving average. I hope you are following clearly. Please, you should not do mistake here. There must be perfection here, please. So another indicator we are going to use now. Then you come here again, press moving average. You can see the 14 we just inputted. So you delete it and enter 7 there. And you see 7. As usual, 0, shift 0, method simple, apply to, close. 4 pixel as usual. You can choose any one you like. And this is the color. So in order not to get you confused, you choose different color. If I choose red, you can choose anyone you like. Or personally, I choose red. So you press here, done. Can you see? This is the red moving average. You can see 7 moving average. So and it's red. So that's that about that. So another one we are going to look at is, you come here, then you scroll down to oscillators. These oscillators, you choose MACD. Or did I call it MACD? So in our MACD, please make sure our fast EMA is 7. I think I've said this before, that's why it's showing this number. This is not exactly the number you are going to see. You are going to see different numbers, but make sure fast EMA is 7, slow EMA is 9, MACD SMA is 7. Please make sure this number correlates and apply to. Make sure it is high. You press this drop down, then you see close, open, high, low, medium, and so. Then please make sure it is high. And here you can choose any pixel you like, but for me to look bold, so I choose 4 pixel. So you can see I choose 4. And this main, leave it as this color. Signal, let it be red or anyone you like. But this is the main settings that we really need. 797. Apply to close, and leave it like this. So you press done. Can you see? That's our MACD. So another one we are going to look at, which is the final tools that we need to trade this highly profitable market. You come here as usual, main chart, and see average directional movement index. This is it, average directional movement index. So this is the last one that we are going to use. Press it. Please make sure the period is 14. What I call it, 14. The period should be 14. So now style, 4 pixel, and this is the only thing we need here out of these 3. This plus D high, minus D high, we don't need them, so you can leave them as maybe 1 pixel, so it won't look bold at all, so you won't see them. And please, this color is very important. Choose this color for these 2. Choose the same color for them. The reason why is that they will not look, you won't be able to see them very well. This is the one we need. This is the one we need. So let it be 4 pixel, and choose any color on this style. But this plus D high, minus D high, let them be thin lines, and choose this color. So in order for you not to be seeing them, it's only this one we want to see. Then before you press done, come to this level. Can you see this? Levels. Press A. Style, 4 pixel. Can you see? Then color, you can choose any color you like. You can choose any color you like. Any color here. So I choose purple. So, but before you leave, you please make sure you press this plus sign. I've pressed it before, that's why it is showing this description. It will not show it for you at first. So please press this plus. When you press it, it comes like this. Can you see? Description. So now you enter 26. Please don't mind this second one. It's just only one description you need. When you press this, it will bring just one description for you, and that's only one we need. So this one is not useful. Please ignore this. It won't show this second description. It's only one description we need. And press 26. Enter 26 here, please. Input 26. So when you input it, you don't need to do anything. Just go back here. You can see. Just go back. Let your levels be only 26. Don't mind it 0. Don't mind it. So then press done. Can you see? I hope you understand. This is the 2 lines that I told you that we are not going to be using, that is not effective. These are the 2 lines. So it won't be obvious. This is the one we really need. And I hope you get it very well. So let me say it again. This is our moving average. You input 48 here, 0 simple close, 4 pixel. Choose any color you like. Then press done. This is our second moving average. 14, 0 shift. Method simple, apply to close. Style, 4 pixel for it to be bold. And I choose my own color as blue. This is a third moving average. Period 7, shift 0. Method simple, apply to close. Style, 4 pixel for it to be bold, and I choose my color as red. MACD, fast EMA 7, please. Slow EMA 9, MACD SMA 7. Apply to high. Main 4 pixel, and this is the color that is going to be there. I think this is the default color, so you can leave it like this, ash and red. Signal 4 pixel, and you press done. Then this is our last tools. period 14. Please let the period be 14. No mistake, please. Style 4 pixel. You can choose any color you want. Plus DI 1 pixel, so it won't be obvious. You won't see them. You will hardly see them. Minus DI 1 pixel. You choose this color. We don't need this at all. We don't need this. It's only this style we need. Then levels. Come to levels here. You choose the pixel as you want. For it to be bold or thin, you choose any color you want. Then you press A to bring description. Then you input 26. Don't mind this 0, please. Don't mind it. It's only one description we need. You don't need to enter description twice. Just one. Just press this once, and once it brings this description, just enter it and input 26. When you input it, don't press this again. So just come back here. Then you click done. I hope all these indicators that we have added, this is where they will be useful, and this stage is very, very important. Please listen attentively. So let me start from the bottom. You can see this 26. If you remember in the previous video, this 26 line, this is the levels that I told you to impute 26, your ADX. Excuse me. So this is the 26 levels, and the period, this is it, the 14 period. If you go back to the previous video, this is the 14 period that I'm talking about. So the use of this indicator is telling you when to enter the market. It's one of the confirmations that you will have before you enter any market. So let's choose from here. Can you see here? This 14 period is above this 26 level. If you get anything like this, you know that you are safe if you enter the market. Please follow me clearly. Anytime this line is above this 26 level, then you have the probability of having huge profit if you enter the market. But if it's below this, please don't enter at all. Even if you have confirmation from here, I'm here to explain this. I will explain it very soon. Or you have confirmation from this or this or this, please don't enter. This is telling you that the market is not trending either upward or downward. It is ranging, like ranging in a very small time frame, like ranging up and down in a very small, with a very small movement. And if you enter with such market, you are likely to lose your money, because the market is not trending up nor trending down. So, and we only make money if the market is trending up or trending down. But if it's ranging, no matter how, your emotions will set in and you feel like closing your trade, because when you are in loss, you won't want to listen to anything. You will be scared of losing your money, thereby you close it prematurely. So please, anytime this ADX is below this 26 line, don't enter at all. Don't try to enter, please, so you won't lose your money. It's better you stay away from the market than to rush in and lose your money. There is opportunity in the market every day, every single day, every day. Especially this volatility 75 index, there is opportunity every day. We make money every day. It is sure. You just need to practice this strategy. It is very, very simple. You just need to take to my advice and listen to my instruction. Follow my instruction very well. So this is the number one indicator we are using. So as you can see, this thing is trending up. You see, when it's trending up, this line is above this 26 level. So you can see here, see this here. You can see here. You can see how it goes here. You can see. But now let's come back here. I'm coming. I want to show you. So you can see this thing is really trending up. Like, it's really above this 26 line. You can see how this market goes. You can see. If you have taken your trade from here, you can see the line is above this 26. Assuming you have taken your trade from here, you buy because the market is going up. Then you buy from here. You can see how much profit you would have been. huge profit. I mean, huge profit. Even if you enter with the lowest lot size, I mean 0.01, you'll be in huge profit right now from here. So this is the usefulness of this. But let me show you something. Excuse me, please. You can see here is below this 26 level. So at it being you take your trade here, you can see how it will be playing with your emotion. It will be going up, going down, going up, going down till it reach here. So if you take your trade here, it's likely you are going to lose your money because it will be ranging within this level. So there's no clear signal here, and this is 30 minutes time frame. You can see how many hours it's going to take you before it's come here, before it starts going up. Only if you have good equity, I mean your trading capital is good, is big, and you use reasonable lot size. You don't use big lot size, please. You don't use big lot size when you are trading. You use lot size according to your trading capital. For example, you use 0.01 for $100 account, 0.01, 0.02 for $200 account, 0.03 for $300 account, and goes on like that. If you have $1,000, you use 0.10. Please don't be greedy. If you are greedy, you are going to lose your money. Please, money management is very, very important in this business. Money management. It's better you reserve your money for better opportunities than being greedy and lose your money at once. Please. So this is what I was showing you. Can you see here? As you can see, when these things are above this line, you can see how it trend up. It retraces little, then come down again. So this thing will be up always. If the market is trending with either upward or downward, it will be up. You can see here, it's up within this area because it trend up, then come down again. So no matter how, if the market is trending upward or trending downward, this ADX, this line will be above this level, please. So that's number one. So the second one is MACD. You can see this is very, very simple. You just need to confirm. When you confirm from here, this is the second indicator you confirm from. Okay. Here, nobody will tell you that this market is trending downward. Can you see? Because these small thing hash lines, they are below this level. This 0.0000. This is the level you'll be looking at. This level you'll be looking at. Anytime these little lines are above this 0.00 line, it's telling you the market is coming downward, so you sell. If the market is coming down, you sell. If the market is going upward, you buy. Can you see here? Let me switch to lower time frame. Let's go to maybe M15. Can you see? It's trending very well. You can see, because if you go to lower time frame, you'll be able to see how markets are reacting fast. But if you go to, can you see now? It's trending downward. But now let's go to maybe H4, 4 hours. Can you see? It's still telling you that the market is going up because it takes a lot of time before this 4-hour candle responds. This candle alone it takes it 4 hours before another one forms. That's why it is not showing that the market is coming down. It's telling you that it's still going up. But if you go to now M30, that's 30 minutes, you can see it's already coming down, because this 30 minutes, you can imagine how many candles is going to form H4. That's about 8 candles. 8 candles of this one will form 4-hour candle. So before it shows it's coming down in 4-hour time frame, the market would have gone far. So if you want to enter market, you can choose maybe M30 or M15. So now can you see M15? It's telling you the market has been coming down. It's still coming down here. So now back to this ADX, you don't enter market here. Can you see? It's just ranging. Only scalpers they can enter market. What I mean by scalpers are the type of traders that enter market within few minutes. When they are in little profit, they zoom off. Those are what we call scalpers. We have many type of traders. We have scalpers, we have intraday. Intraday are the people, are the traders that place their trade when they are in profit within 2, 3, 4 hours, they zoom off. And we have swing. Swing traders are the type of trader that can hold on to their trade for days or weeks. Those are the swing. But here we are intraday. Don't scalp here. If you scalp, it's likely you are going to lose your money because it will be playing with your emotions. So if you see this below ADX, below 26 line, please don't enter. Just know that it's just ranging. As you can see here, it's ranging. But when it gets here, it shoots up. So it's telling you that the market is preparing to coming down. So as you can see here, all this thin line, they are below this 0.00 line. It's telling you that the market is coming down. So if it's going up, you can see this line, they will be above. You can see this, your confirmation. You can see here, it starts showing up very well here. From here to here, you can see this thin line. Can you see them? They are up. This is the height the market went before it starts ranging here, before it starts going up again. So can you see? This is another confirmation that the market is going up. So can you see? Can you see here? The market starts here, going up. This thing is reacting to it. It's telling you that it's going up. It retraces little here, come down little, then it starts again. You can see as it retraces here, this thing reduced down. It's telling you that maybe it's coming down, but it's not coming down. It started going up again. You can see how this MACD reacted to it. So that's another confirmation that excuse me, the market is either going up or coming down. So that's that about that. This yellow line, our 48 moving average, is just for you to confirm your trend. It's just for you to confirm either market is going upward or downward. That's another confirmation, please. We need proper confirmation. The reason is, if you lose your money once in trading, you will understand what I'm saying. I don't want anybody to lose their money. So it is better we take little we can take. We take little profit we can take and rest for the day, than trying to catch every profit in the market. You can't catch all the profit in the market. Please know that. You can see market trending up. If this thing is above, don't go. Emotions is very, very important in this business. It has happened to me before a lot of time. I don't want that to happen to you. Try to control your feelings and emotions, that I must make all the profit in the market. No, you will only lose your money. You can't catch all the money in the market. You can only take your little daily and go and rest for the day. Set your target. If it's $50 per day, it's okay. If it's $100 daily, it's okay. It depends on your trading capital, the money you start with. If you start with $100, have it in the mind that, okay, I'm going to be making $20 to $30 every day. If you are making $10 to $30, that's 100 or 150 at the end of the week, or about 170, 200, maybe for 7 days. So please try to have trading target. If you meet your daily target, just go and rest for the day and come back second day. That day has come. But if you keep trading, though you may profit more, but at the same time you may lose your money. So please, let's have trading plan and daily target. It's very, very important. So this yellow line will tell you the trend. Let's go back. Anytime you see this yellow line below all this candlestick, this is what we call candlestick. This, anytime you can be rest assured that the market is at least for some hours going up. Can you see? Let's switch to 30 minutes for you to see it very well. Can you see? At least it's going up for some hours. Can you see how many 30 minutes candle? This one candle will form for 30 minutes before another one forms. That's the meaning of the time frame. If you don't know, this one form for 30 minutes, then another one open for 30 minutes. If you go to H1, that's 1 hour. Or this one candlestick forms for 1 hour, then another one for 1 hour, another one for 1 hour. So that's just the psychology behind it. So let's switch back to our 15 minutes. So can you see? This is telling you that the market is buying upward. It is trending upward. So now, assuming you enter the market now and find the market now, the first thing you look at is this. Okay, this is upward. It's telling you this is trending above this 26. So it's telling you this thing is coming, and you see the candlestick coming downward. Okay, then you wait for this confirmation. You see this thing, they are downward. Now the candle has crossed the yellow line is telling you the market is excuse me, is ready to come down. So that's three confirmation. But this blue and red line is just for you to enter. This is the final one that will tell you when to enter, please. This is the final one that will tell you when to enter. After you confirm from here, from ADX, whether the line are above the 26.00 level or they are below. If they are below, don't enter. That's ranging market. It's not going either upward or downward. It's very dangerous. Then if it's above this line and it's telling you that the market is trending either upward or downward, and if it's here, you know it's downward because this line are below. If it's upward here, you know the market is moving upward, as you can see here. So now, after this confirmation, first confirmation, second confirmation, the third confirmation is to look here. Okay, the candlestick has crossed this line. It is 48. It's telling you overall trend. The market is coming downward, because as long as this thing properly goes up, then for some hours the market will be trending downward. But before you finally enter, this is going to be your confirmation. Anytime sorry, anytime you see this red line, we call them fast moving average. If you remember, it's 7. Let's go and check. This is 7. The lower the number of the period of moving average, the faster they react. I want you to get that. This is 14. Can you see? 14 is bigger than 7, right? And this is 48. Now let me explain them to you. This 48 is slow moving average. It reacts slow to the market. That's why it's a trend confirmation moving average. It confirms your trend for you. If it's above the candle, then it's telling you the market has been going downward. If it's below, you can see it's below from here to here. It's telling you the market is still going up. You can see from here, it comes here, then come down a little, it comes here. It's still below. It's telling you the market is going upward. So it's slow moving average, and it's good for our trend confirmation. But this blue and red, blue is 14 and red is 7. So this is the one we'll be using intermittently, this 7 and blue. Anytime you see this red line that cross this blue line, then you confirm that the market is ready to come down. So you can see here, from here to here, it crosses it. But before, this is 1, 2, 3, 4. This is about 5 or 4 candlesticks. That's about 2 hours. The market sell for a little time and come up. But if you follow my instructions strictly, you won't enter market from here. Though this is our entry confirmation that will give you last confirmation. But if you come down, now let's trace it. From here, it crosses it here. This is the moving average that will confirm your entry for you. Now from here, it crossed, but look down and see this ADX. Where is it? It's below 26 levels. So it's telling you that if you enter, the market is not ready yet to come down. You will later lose your money. That's what it's telling you. Can you see? And this line, they are not properly formed below. It's telling you it's fake out. That's what we call fake out in forex trading. If you have been trading forex before, I'm very sure you understand what I mean. Fake out. Fake out are the type of market that it will look at if it's going up. Then buyers will quickly enter. They will rush and buy the market. But within some minutes, the market will come down again. Thereby, you lose your money. And if it's downward, it goes down for like 15-30 minutes, depending on the time frame you are using. Then immediately it's up again. It's telling you that this ADA is very, very important. It will tell you it is fake, that the trend is fake. Now it crosses downward. You will say, okay, our mentor has told me anytime this red moving average cross this blue, I should set the market after all this confirmation. But if you come here, you can see this is still below this 26 line. So no, I'm not going to enter this market. It is fake out. They want to trap me. They trap people a lot. So if you enter here, if you enter sell from here, immediately this thing cross, you see what happened. It goes up again. Then you lose your money. So please always make sure all the confirmation and the conditions are met before you enter the market. I hope you understand this very well. So you can see, let's go back and see some examples. You can see here, this is the red line that will tell you when to enter the market. Please take note. After all the confirmation, this is the red line that will tell you when to enter the market. Can you see here? It crosses it upward. And now this thing is beginning to form. This is one of our confirmation. Can you see? And if you come to DX now, it's properly above the 26 level. Can you see from here that it crossed? Just let this candle close upward. You know, it's bullish candle. Bullish are the candle that goes up, while bearish candle are the candles that come down. So in bearish candle, this bearish candle, that's where the sellers are in charge of the market. But in bullish candle, bullish means goes up, bearish means goes down, and bearish, this is the bullish candle. So you wait for this bullish to close. When it closes, then look for another candle. This is the second candle, and from this second candle, can you see here, you won't enter at all because it's still forming. So you wait here. So you wait till it reach here properly. Then you can see this thing has already started coming up. So you can enter around this area. And when you enter, you can see how up it goes. If you enter even with 0.01 lot size, you are going to have nothing less than $20 to $30. And that's already, you have made your money that day. Talk less of entering with 0.1, that's about $300. You can see. So that's about that. Please make sure you confirm everything. Let everything be confirmed before you enter. This is the first one. This is the first indicator to tell you when to enter. This is the second one. This is the third one, this yellow line, to confirm your trend for you, whether it's upward or downward. And this is the last confirmation, this red and blue lines. And before I end this, when to exit the market, because it's very, very important. Exit, entry and exit points are very, very important when trading. So let's take our example from here. You can see here, this market. Okay, let me look for a perfect explanation. Okay, here you can see it cross it, but you wait till it reach here, till the candlestick cross the yellow line. Can you see it cross here? This is your entry, this is your last confirmation. You first of all look here, you can see this thing is coming upward. That's number one confirmation. The second confirmation, you can see it's about to go up. You won't rush to enter yet. Please control your emotion here, so you won't lose your money. Then this is the last one. Can you see it crossed above this, which means it's telling you the market will be soaring high. It's going upward. Can you see? This is your trend confirmation. After this, you know, this I said this is what you will use to enter, yes, but you have to let this tell you where the trend is going. So whenever this thing, whenever all these candles cross above this 48 moving average, then it's telling you that you can rest assured that the market will be going up at least for some hours. And you can see, I hope you see here now. So so if you want to exit the market, this is when you will know. This is what we tell you. This is the red moving average that we tell you, because we call it fast moving average. So can you see now, this thing is still up. So and you are still buying, you are in profit already, and this thing is still up. But immediately you see this red line crossing this blue line downward, you know you are in buying position, you are buying, and the thing is supposed to be going up. But immediately you can see this black candlestick, they come down, and you see this red line. Please listen very well. This red line will determine when to leave the market and take your profit. Can you see? This red line cross this blue line downward. It's telling you, you don't wait for it to come down here. As soon as you see this red line crossing this blue line downward, then please take your profits or close your trade and go and rest for the day. Please, you can see, if you don't do that, you'll be playing with your emotion. You can see now it started crossing up, crossing down. That is telling you that the market is not favorable at that time. And you can see this is not even showing whether it's going up or going down. You can see here. I hope you understand. This work perfectly if you can follow my instruction. It works perfectly. And be patient. You can enter the market and see this for like 2 hours, 3 hours. You need to be patient. Please don't rush. Market is not going anywhere. Market has been existed for centuries ago, and it will keep existing even after we die and our children are still alive. So there is market is not going anywhere, and there is opportunities every day. So please don't rush. Be patient. Patience is part of this business, please. So you don't enter here because this is below, and you can see this is not even showing anywhere. It's not showing up like here, and it's not showing it downward like here. So you can see, as you can see the candlestick, you see it's just moving sideways. You can see the moving average, it cross it down, cross it up, cross it down. You can see. So this will be playing with your feelings. Please avoid this type of market. So that's about that. Please, whenever you are buying, and this red line is the first confirmation that will tell you. That's why I call it fast moving average. It's the first confirmation that please leave this market. It crosses downward, leave your market and go and rest. You already been in profit if you have taken your trade at least from here. This has crossed it. You'll be rest assured that the thing is going up. This has confirmed it for you. This is up. This is above this 26 line. That's the three confirmation. Then you just wait for it to cross above this yellow line, so it can confirm your trend for you that it is going up. This yellow line is trend determination to determine your trend for you. So if it's above the candlestick, you know that. If it's below the candlestick like this, you know that the market is trending upward. You can buy. And if it's above, sorry, let me find it clear. Above market. Now you see here. Now you see, very clean. It's below, and it's telling you the market is what? It's moving upward. And can you see it cross it down here? You are buying already, then you see this red line that cross it down. Nobody will tell you to close your trade and take your profit. It's telling you the market is ready to calm down. And you can see I see it keeps playing with people's feelings and emotions. Some people would have lost their money here. It's going up, going down, going up, going down. And can you see it is not even showing anywhere? It's showing it down trend little. It's not coming down and it's not coming up. Can you see? It's line little below and above the 26 line till it reach here. Can you see? So please avoid this type of market. So this yellow line is below. It's telling you that the market is trending up. Can you see? This yellow line is what? Above. And what happens? The market is coming down. So this is trend determinant. It will determine your trend for you. So please make sure you follow my instruction. I hope I explained very well and this is clear. Can you see? It's above. The yellow line is above and the market is trending downward. Can you see? Very, very high. It's telling you the market is selling. And can you see? This thing is above. It's even far above. It's telling you that even if you enter the market and you are here and you see the market here or here, it's telling you that you can still sell. Just wait for perfect entry. And perfect entry that I mean is that whenever the market is going down and you, even after all this confirmation, just don't rush. There's what we call retracement in trading. If the market is going down like this, and you see this has confirmed for you, this red line that has crossed it downward, that's first confirmation. You see this line here, another confirmation. This is line above, another confirmation, and this is this yellow line is above. It is telling you the market is selling. That's another confirmation. Just wait. That's what we call retracement. And let me show you. Can you see this black candlestick? I call it bearish candlestick. In the before, if you remember, I call this bearish. When market is selling, is bearish. When it's buying, is bullish. So now, what we call retracement is that anytime the market is selling, there's one point that it will retrace up little. Can you see? It's selling. Can you see this bullish? This two candlestick. It comes up little. Then you can sell here. The reason is you wait for perfect entry, because if you do not do it and you see the market coming down, you immediately rush to sell here. Then it comes here, you are in profit. You want to write it down, then the market retraces little to here. You will be fearing that is this market coming up again, so you may want to close your position and leave the market with loss. But please just wait for little retracement. When the market retraces up to anywhere, maybe to trace it like 5 to 10 pips, then you can sell again. And can you see? So you will be maximizing your profit like that. Can you see? So please take note of this very well. Can you see? So these are the, so can you see? This is clearly below. It's telling you, and can you see this red line? It crossed it. So it's telling you that's even crossed it from here. Cross it here. But you wait for the candlestick to come above this line, so it can confirm that the market is truly going up. So that's that about that. And please, my advice for you, practice this strategy for at least some days. Please, I will give you a guideline on how to open a demo account. Demo account, you can open it on MT5. I will give you a video on how to open it. So the money there is not real money. So you can practice with demo account for few days and make sure you are perfect. While you are practicing the this strategy, you'll be seeing your result, the trade, your profit and loss, so you will know that you are good with this strategy. And when you are done with this strategy, then you can come to live account and be making money. This is a lifetime opportunity, and once you get it, it's yours forever. You'll be making money. People are sending testimonies every day. I think I've shown you in the group. People are showing testimony every day. This has changed life. So please make sure you follow my instruction, so you too you can have a success testimony. Please make sure you practice it. Don't jump into live account immediately. Just make sure you practice it, and make sure you watch this video over and over again, even if you can watch it 5 times, 10 times, so you'll be able to get all my explanation and instructions very well. Then you are good to go. Believe me, you'll be making your money steadily every day. This is what we do every day, and we are making money. Even if you start with $100 account and you are making $20 every day, including weekend, that's about $140. If you are making $140 in Nigeria, you know how much it is. It's roughly 40 something thousand or 50,000. So that's a lot of money. Even some civil servants are not earning 50,000 per month. Talk less of you earning it in just a week. And if you have big money, maybe like $500 or $1,000, believe me, you are money, because you can set your daily target at just $100. It's very easy. If you have like $500 trading capital, or 700 or up to 1,000, believe me, $100, $200 will be very easy for you to be making every day. And believe me, if you are making $100 every day, that's $700 in a week. You can calculate how much $700 in a week is. You can see that's a lifetime opportunity. It's a life-changing opportunity. So please take note of my advice and use money management. Money management is the key. Please. Thank you so much, and I will see you in the next video. Bye.